We all have that report card from school, right? But let's be honest, the one that really shapes your future isn't about grades. It's about something we almost never get taught. So today, we're going to tear up the old rulebook and dive into the financial report card that actually matters. First up, let's talk about something I like to call the degree delusion. We've had it drilled into us our whole lives. Get a good degree and you'll be successful. But what if that's only, half the story? There's a huge gap between what gets you an A in class and what actually helps you build a life.
Just think about this for a second. Have you ever walked into a bank, slapped your engineering degree on the table, and asked for a business loan? Of course not. That sounds ridiculous, right? No bank manager is going to say, wow, you got a 95%, here's a check. And yet, that's kind of how our society thinks the world works. And that, right there, is the delusion.
And this slide really breaks it down. On one side, you've got what society teaches us. Chase the degrees, get the high scores. But then you look at what the people with the money, the banks, the lenders, are actually looking at, and it's a totally different game. They don't care about your GPA. They want to see your financial statement, your income, your debt. That's the stuff that matters.
This quote just hits the nail on the head. We spend years, literally years, learning how to build a perfect resume, but we get zero, and I mean zero, training on how to build a solid financial statement. It's this massive blind spot in our education, and it's why so many smart, hardworking people just can't seem to get ahead.
So, what is this super important financial statement anyway? Well, the good news is it's not nearly as complicated as it sounds. You don't need to be some accounting wizard. In fact, your entire financial life really boils down to just 4 key things.
First up, you've got your income. This one's pretty simple, right? It's all the money flowing into your world, from your salary, maybe a side hustle, whatever it is you do to earn.
And then, of course, you've got expenses. This is all the money flowing out. We're talking everything from the big things like your rent down to the little things like that morning coffee you can't live without.
Okay, number 3, and this is a total game changer. We have assets. Now, the definition here is so simple and powerful. An asset is anything that puts money into your pocket, even when you're not working. Think about that. It could be a rental property, stocks that pay you dividends, or a business that makes money while you sleep.
And finally, we have liabilities. And yep, you guessed it, they're the exact opposite of assets. A liability is anything that constantly takes money out of your pocket. This is your car payment, your credit card debt, any loan that's just draining your cash month after month.
So when you put those 4 things together, you get these 2 incredibly simple but powerful equations.
Income minus expenses, that's your cash flow. It tells you if you're making a profit each month. And assets minus liabilities, that's your net worth. That's the big picture. This page right here, this is your real report card.
But here's the thing that's truly shocking. The source material points out that in developing countries like India, a staggering 8 out of 10 people don't even understand these 4 basic concepts. Just let that sink in. The huge majority of people are trying to win a game without knowing the rules. It's not their fault, it's just that nobody ever taught them. Okay, so how do we fix this? How do you go from being in the dark to actually taking control and building a financial statement that makes you proud? Well, it really just comes down to a simple 3-step plan.
Pillar number 1 is budgeting. And look, I know, nobody really likes that word. But this isn't about being cheap or depriving yourself. It's about being the CEO of your own money. It's about you telling your money where to go, instead of wondering where it all went at the end of the month.
And a fantastic way to start is with the 50-30-20 rule. It's so simple. 50% of your take-home pay goes to your absolute needs. Rent, food, you know the drill. 30% is for your wants, the fun stuff that makes life worth living. And that last 20%, that's the most important part. That's for your future self. It goes directly to savings and investments. Let's just make this real for a second. Let's say you earn 50,000 rupees a month after taxes. Boom. The rule gives you a clear plan. That's 25,000 rupees for your needs, 15,000 rupees for your wants, and a really powerful 10,000 rupees getting put to work to build your wealth. See? Simple and so effective. So what do you do with that 20% you're setting aside? That brings us to pillar number 2, investing. And listen, this is absolutely critical. Just saving your money will never make you wealthy. Seriously. Because of this thing called inflation, money just sitting in a bank account is like walking on a treadmill. You feel like you're moving, but you're not actually going anywhere.
Yeah, that treadmill is inflation, and it's silently eating away at your money's value every single day. The source material is so blunt about this, and I love it. Those who invest become rich. full stop. And you don't have to be a stock market genius. You can start super simple with things like ETFs, which are just baskets of different stocks. And then maybe as you learn more, you can look into things like real estate. The main thing is just to start.
And that brings us to our third and final pillar, and it's one that people get wrong all the time: debt management. You see, the biggest mistake is thinking that all debt is automatically bad. But the truth is, not all debt is created equal.
On one side, you have what we can call good debt. This is when you borrow money to buy an asset, something that's going to make you more money down the road. Think a loan for a small business or a rental property. But on the other side, you've got bad debt. This is when you borrow for things that just go down in value, like a loan for a new phone or a big wedding. One literally builds your wealth, and the other just destroys it. So let's bring this all home. Those three pillars: budgeting, investing, and smart debt management, that's the blueprint. That is how you go from letting your finances just kind of happen to you to intentionally building the future that you actually want. This is how you build that solid foundation.
And this quote just brings us right back to where we started. It's the ultimate mindset shift, isn't it? It's about deciding, you know what? I don't care about collecting paper degrees. The real goal is to build a financial statement that's so strong it speaks for itself. That right there, that is the real measure of success.
So, I'm going to leave you with this one question. Later today, take 5 minutes and just jot down your 4 numbers: income, expenses, assets, and liabilities. What story is that page telling you right now? And more importantly, what's the one small thing you can do today to start writing a better, more powerful story for yourself? It's your story to write.